Forensic accountants are methodical problem solvers and detail-oriented professionals that are able to find the slightest inaccuracy that leads to more in-depth investigations. Forensic accountants can work in legal or insurance industries as well as for corporations or government agencies like the FBI. Forensic accountants are needed for white-collar crimes, high-value divorces, mergers and acquisitions, business litigations, and insurance cases. In 2012, forensic accounting was a $10.9 billion industry, and by 2018, it is expected to reach $16.3 billion, resulting in a growth rate of 7.8%. Al Capone was brought down by the U.S. Treasury Department for tax evasion in 1931. He was sentenced to federal prison for 11 years and had to pay back over $215,000 on his taxes. In 2001, Enron reported losses of $591 million. CEO Andrew Fastow and Enron's accounting firm Arthur Andersen hid losses in order to make company reports appear better than they actually were. Eventually, the SEC caught on and passed the Sarbanes-Oxley Act of 2002 in hopes to prevent future instances. In 2009, Bernie Madoff was caught running an elaborate Ponzi scheme. He managed to scam $65 billion from investors while still pocketing $20 billion for himself. Madoff is now serving a 150-year prison term. According to the 2016 global fraud study conducted by the Association of Certified Fraud Examiners, 5% of revenues are lost through fraud in the average organization per year. $6.3 billion in losses were reported, with a median loss of $150,000. Additionally, 23% of cases had losses of at least $1 million. Also, asset misappropriation was evident in 83% of cases, with a median loss of $125,000. Furthermore, financial statement fraud made up 10% of cases, with median losses of $975,000. Also, in 95% of cases, the perpetrators tried to conceal their fraudulent activities by creating or altering physical documents. The most common detection method used in 39% of cases was tips. Therefore, companies with tip hotlines were more likely to detect fraud, as 47% of cases were detected via a hotline, while only 28% of cases were detected without a hotline. As a result, in 40% of these cases, companies decided not to report these issues to law enforcement in fear of bad publicity. Ultimately, forensic accountants must always be on the watch because at the end of the day, they are the most ethical and reliable crime fighters that the world can trust in order to ensure a more secure economy today and in the future.